What is going on with the San Diego County housing market? Now, I intentionally waited to film this because you probably could have gotten a lot of false narratives up until this point. And the reason I've waited is there was some big news announced on December 18th, and well, let's see how it's going to affect the housing market. In the meantime, let's get into the numbers and let's get into the detail. Now, overall, these are November's numbers, and I'm intentionally recording this at the end of December so that you can kind of see what's going on and what's going to happen in 2025. What is amazing to see is that the numbers are up all across the board, and this is with mortgage rates where they have been this year. Now, what's most interesting is that new listings, meaning that new inventory that has come to the market, tracked by our system, is up. So if you look at our overall numbers, you can see that new listings up 21%. Our pending sales, closed sales, median price, everything is up across the board. What does that mean? Housing's not getting cheaper. If we get specifically just into the detached home market, still numbers up across the board. We go in deeper into the condo and townhome market, the numbers are even higher. Why is that? Well, that is San Diego County's entry-level housing. And that became the most attractive point with mortgage rates higher for people to buy their first home in San Diego County. Let's get deeper into it so you can actually see, because this is one of the most interesting statistics for 2024. We are up year to date 23% higher in new listings than we were this time last year. Now, here's what's even more interesting. If you actually go into other reports, mortgagereport.com actually lists San Diego as the county that has 52% more listings this time of year than last year. It is the number one city in the nation with more active listings year over year than the previous year. So we have had a tremendous of opportunity to be able to go ahead and have a supply of homes. I've been reporting for a number of months now that inventory supply has consistently been over 4,000 units, and we have not had that for some time. But let's go deeper. So if we look specifically at that report, we have to go into the closed sales and how that's actually affected. Well, closed sales are up. Now, not tremendously up, but we will close year over year higher than 2023. And I will predict that to be January's report for a full 12-month report for 2024. This is all being done with mortgage rates that have continuously been on the high side. We've averaged in the high sixes, even in the sevens. We'll get into more of those details. One thing that is interesting, prices continue to climb. However, you're seeing some fluctuations across the county in different marketplaces. Overall, prices are down from the beginning of 2024. However, there are some markets that are actually holding. Coastal communities, things of that nature, those prices are going to hold for the longer term. Some outlying areas, we've seen prices adjust at a much greater rate as rates kind of have maintained a high point. This is what happened on December 18th. On December 18th, the Fed cut a quarter point from the Fed rate. Now, what does that mean? Does nothing to do with mortgage rates. And actually, them cutting the quarter point did absolutely nothing for future home buyers. However, what Powell said in the interview after the rate cut is what alarmed everyone and actually sent mortgage rates skyrocketing. We were under 7%. After that press conference, we were above 7%, and we have not recovered since that date. So where are we headed and what was said? Well, basically what was said is that there are going to be fewer rate cuts in 2025. So all this vision, and maybe you've heard it from other people, saying that we were going to have mortgage rates in the fives in 2025, I don't see it. It's not going to happen. You're going to have to get comfortable with a 6% mortgage rate. Where in the sixes? A lot of it just depends. But the reality is that we're closing out here in December of 2024 with rates closing today over 7%. Now, yes, There are rates for different type of loans that are under 7%, but the market did close today with rates over 7%. So my insights for you going into 2025, if you're a home buyer, get comfortable with mortgage rates in the sixes. They're going to be in the high sixes. There are going to be programs to actually incentivize and help you buy down your loan. If you're a home seller in this marketplace, you're sitting in a very good spot. Here's a reason why. Inventory is increasing, but even with rates where they're at and they're maintaining close and hovering around 7%, there are home buyers that are still looking to purchase a home. Maybe they're step-up homes. Predominantly, we're seeing first-time home buyers in the condo and townhome market at lower price points. In the luxury market, we have seen some of the prices fall, especially at the very high-end luxury market. But overall, you can have confidence as a seller that 2025, if you put your home on the market, it's going to sell. One of the things I do think sellers need to be understanding and reasonable with, that you're going to have to work with buyers in this marketplace is based on those mortgage rates. What do I mean by that? Seller credits or concessions to buy down the loan for the buyer. Allow them or incentivize them to be able to come to the table, because gone are the days of having a tremendous number of offers on a property. If you get one, maybe two. Our average this year has been 3 offers on a property for our listings, and that's on a high side. Gone are the days of double-digit offers on a property. Now, that could be, you could have a unicorn, and there are anomalies in this marketplace. We've had them. We just had a property, had 16 offers on it. But that is an anomaly in a unicorn type property. The consistent is 3 or less if you put your home on the market, and your job as a seller really is to work it through its paces, depending on the buyer's circumstances, to see if those terms and conditions can be met for all parties to agree. And I think that's going to continue for all of 2025. So I'm very confident that if you're a home seller, you're well taken care of and you're not going to see any type of market crash or any fluctuation, because there is not enough inventory to go around for the buyers in the marketplace. We have people that are looking for homes. We have people that are looking to step up into a home that are possibly selling a smaller unit. What we are seeing is less and less people sell their first home. Most are keeping it and renting them out. And I advise that. If it works in your portfolio, I totally agree. You should be keeping homes. Now, there's some other tax advantages that can get worked around there, but depending on your circumstances in your real estate portfolio, if you're a step-up buyer, try and maintain that first home that you have. But I think that we're seeing for 2025, where most of the market's going to come from is in the boomer realm. And if I could have really a crystal ball and give some advice to the Fed, if you change capital gains tax, I think you would have a plethora of homes come on the market in a very, very short amount of time. Currently, our capital gains tax exemption is $250,000 if you're single, $500,000 if you're married. And we're working with clients actively right now that are hitting those caps. And if they had $1 million tax exemption, they would probably not think twice about going ahead and selling their home. So these are the things and some of the items that we're going to conquer in 2025 and have lots of discussions on. But I want to give you an update to where the market is at right now, so you can see that overall we're sitting very, very well going into 2025. And you can have confidence as a home seller that if you put your property on the market at basically market rate, it's a high confidence that that home is going to sell. Marketing time has picked up. Our average around the county is about 32 days on market. Some communities are even more than that. We've seen as high as 76 days on market, and that's not unusual, especially with the volatility of mortgage rates. So if you have questions or you want to know specifics regarding your property, reach out to me directly. I'd be happy to help you and give you that finite analysis that might work for your home. If you got any value out of this or any other of my videos on the channel, make sure you like and subscribe, and I look forward to see you on the next one.